right. Good morning, everybody. Good morning, all you magnificent melon heads, and happy Tuesday, everybody. Today's November 26, 2024. The top story this morning is probably a word that you might want to get used to. That word is tariffs. The Donald, Mr. Orange, the president-elect, he is talking tariffs again. Last night, this story started going around. I got text messages from a lot of people about this. President-elect Trump is threatening 25% tariffs on Mexico and on Canada. This is interesting. This is unusual here because one of the things that President-elect Trump likes to hold up from his first term in office is the USMCA, the US-Mexico-Canada Agreement. It's a terrible acronym, I know, but the USMCA, remember that was the big replacement for NAFTA. Trump was a big campaigner against NAFTA. He was threatening tariffs. And then we got this USMCA agreement. Well, now he's threatening to just like crumple that up and throw it out. And he's threatening 25% tariffs on goods imported from Canada and Mexico. Now, the reason he's giving for that is fentanyl and illegal immigration. And he's saying he wants to see more action on fentanyl and illegal immigration in order to open up or leave the borders open. He's sick of fentanyl coming in. Look, fentanyl is an epidemic. Immigration obviously is what it is in this country. So I guess I'm not too surprised at the reasons that he's giving. I am surprised to see him tearing up his own trade agreement. That's unusual. Now, in addition to that 25% on Canada and Mexico, he's also calling for an additional 10% tariffs on everything coming in from China, most of which already has a 15% tariff on it from his first term. So this would be 10% on top of that. So the Donald is a big fan of these 25% tariffs all of a sudden. Now, I don't know if this is just a negotiating tactic. This is very much his style, right? Throw out big numbers, big scary numbers, and then talk down and then, congratulate yourself on a deal after the fact. Maybe that's what's going on here. That's definitely his style. But look, guys, there's no way around this. Tariffs are inflationary, right? When we hear tariffs on China, it sounds like a tax that the Chinese are going to have to pay, but that's not who pays it. Tariffs are paid by the importers, not by the Chinese government. And well, when the importers get charged tariffs, what do? Do they just eat that? No, they usually pass that cost on to the consumer who is already bludgeoned by the previous round of inflation. So there's no way around this, guys. Tariffs are highly inflationary. They are. There's no way around it. Okay, maybe we can try to offset it with a tax cut here or a policy there or deregulation. Again, deregulation is this magic fairy dust that they think, oh, don't worry, we sprinkle some deregulation and we can pay for anything. It doesn't work that way. I'm a big fan of deregulation, don't get me wrong, but it doesn't offset 25% across the good tariffs. So get comfy with inflation, guys. It's coming back. I think, we've seen it. The data has been stubbornly high, especially core inflation has been stubbornly high. Cars are unaffordable. Homes are unaffordable. Insurance is getting worse really fast. And the other stuff just isn't really coming down. So tariffs certainly will not help that. Maybe this helps with the reshoring phenomenon I've heard a lot about. But speaking of reshoring, one of the big reshoring pushes over the last couple of years, we'll go out of order here, I guess, has been this story about Intel, about the CHIPS Act, right? Oh, we're gonna bring back chip manufacturing to the United States. Well, Intel is making news this morning. They finally have been awarded their CHIPS Act grant, but it's a lot smaller than was expected. All right, Intel is taking $7.9 billion in grants. That is $635 million smaller than the grants that were expected. This money is going to go to pay for new facilities in Arizona, Oregon, and New Mexico. Now, that $635 million that's not being awarded, that's because of a plant in Ohio that's been delayed by several years and thus didn't qualify for this funding. But also interesting in this news is that Intel is not taking $11 billion in loans that were offered as part of the CHIPS Act. They're only taking the free money. Like, you want us to pay it back? No. Well, if this reshoring thing, if they were really serious about going elbow deep in the whole reshoring and hiring Americans and building factories here, they'd be taking the loans too. They're not. So the whole like tariffs and trade barriers as a way of driving reshoring, I understand the principle behind it. I don't see a lot of movement on that front, especially not as there's still a lot of wage pressures in the U.S. The Fed has done everything they can to keep wages from rising in this country. But the fact is the cost of living has grown much faster than wages, which means there's going to be upward pressure on labor costs in the United States for the foreseeable future. And what's the biggest impediment to reshoring? Well, it's labor costs. So that problem is just not going to go away. Also going on this morning, we got a lot of retail earnings, and they were pretty mixed. Let's look at the good, the bad, and the ugly in retail. We're going to start with the good because, I'm such an optimist. Optimism. Dick's Sporting Goods. Really good numbers from Dick's Sporting Goods. Net income up 13%. Revenue was basically flat. That's not great, but that's also not terrible. Comps up 4.2%. So sales growing faster than the rate of inflation. That's, the same store sales anyway at Dick's. They're talking about an excellent back to school season for Dick's Sporting Goods. Now, I was trying to figure out what was going on there. There wasn't a lot of detail, at least not in any of the articles that were out this morning. What is driving Dick's? I mean, there's two big categories of Dick's Sporting Goods. You got apparel and you got sporting gear, right? I'm leaning towards apparel as what was driving that, especially like the whole trend of athleisure and, like people are wearing yoga pants for their meetings because of work from home and everything. I don't think they're necessarily selling a ton of golf equipment per se. But there's some other information later on in the earnings, in some of these other earnings that tells me, well, maybe it's not apparel. But that was Dick's. Very good numbers from Dick's. We also got the bad. Let's talk about Best Buy. Net income plus 10%. Okay, that's pretty good. But revenue minus 3.2%. And again, that's not adjusted for inflation. So revenue is falling. Also, the comps at Best Buy down 2.9%. So you've got the ongoing decline in brick and mortar, the Amazon effect that continues, but also just overall weakness in electronics. People are hurt by inflation. People are spending everything they've got on rent. And so there's no money for discretionary items like new gadgets. In particular, weakness in home theater, appliances, and gaming, although those were partially offset by growth in tablets and computing. So Best Buy, bad. Wasn't awful, but it was bad. Now let's talk about the ugly. Kohl's. Kohl's wasn't just bad. Kohl's was absolutely dreadful. Net income minus 63% at Kohl's. Revenue minus 8.7%. Awful. Comps, the same store sales, negative 9.3%. People just ain't going to Kohl's. On top of that, they lowered their guidance. The stock is down 18% the last I saw. Now, it's that Kohl's report that was so awful that makes me say, well, maybe Dick's really is selling more golf equipment or baseball bats or gloves, because if it's apparel that's driving the earnings at Dick's Sporting Goods, then how do you explain what's going on at Kohl's? Is Dick's just gobbling up market share from Kohl's in the apparel business? Is that what's going on? Or is it really sporting goods that are driving it? Let me know what you guys think in the comments. What is behind those really good numbers at Dick's Sporting Goods? My gut tells me it's apparel, but when I look at those Kohl's numbers, it's hard to ignore that. People just ain't spending on their clothes. Anyways, guys, why don't we shrink my big melon of a head and let's see what's going on in these markets this morning, shall we? Hit that like button for the algorithm if you feel so inclined. And if you're new here, hit that subscribe button and come have your coffee with the melon heads, because we do this every morning, except Thursday and Friday this week. Just a reminder, guys, there will be no show for Thanksgiving Day or Black Friday. I'm going to be taking the day off. I'll be on the road with family. The S&P 500, though, is up 17 points here, 0.29% higher this morning. The Dow, meanwhile, is down 143 points, or about a third of 1%. And the NASDAQ is up 95 points, or 0.46%. We got 2 out of the 3 indexes are in the green this morning, the Dow being the exception there. Meanwhile, the DXY is a little bit stronger this morning, 106.91. That's up 9 basis points here. That's being driven, I think, largely by declines in the peso and the Canadian loonie. Although I don't think the peso is an input to the Dixie, but the Canadian dollar definitely is. And both of those currencies are a lot weaker on that tariff threat from the Donald. Also going on this morning, we've gotten the bond market yields higher on the long end again, and, well, flat to lower on the short end. The 30-year, 4.486. That's up almost 4 basis points. The 10-year's at 4.296. That's up 3 points. The 2-year at 4.254. That is up a fraction of 1 point. And the 1 month at 4.642, up almost 1 point. So not a lot of movement happening in bonds here this morning. Looking over at commodities, looks like gold and silver are taking a short break here from this sell-off. Gold and silver both got bludgeoned yesterday, looking a little bit better this morning. Spot gold, $2,632. That's up about $6.81, or 0.25% higher. Spot silver, meanwhile, $30.52. That's up 21 cents, or about 0.75%. We got copper's down 0.1%. Platinum is down 1%. Palladium is up by 0.8%. And West Texas Intermediate crude at January futures are at 69.42. That's up about 47 cents, or about 0.2% here. So again, not a lot of movement in commodities, but mostly to the upside. Bitcoin, meanwhile, getting bludgeoned yesterday and then again this morning. Bitcoin's down a couple of $1,000 here, 91,886 as priced on Coinbase. Now it's showing us down $1,100 here, but this is actually down a couple of grand from where we were yesterday. We're looking at hourly candles right now, guys, on this. I don't usually deal in hourly candles. Let's reset this to dailies here. But you can kind of see we're pulling back here. Bitcoin ran like crazy. We just came up, tickled that $100,000 number. Now we are down below that. Probably going to retest this level. Let's set it back to hourlies. If I had to guess, we're probably going to retest these levels in the high 80s here from a couple of days ago. I don't know, where would you put your resistance becomes support? So I would say we're probably looking at something like, well, right about where we're at then, right around 91,000. So look for Bitcoin to catch a bounce at this level. If we break down below that, well, our next support level probably in the mid 70s. So let's look for this level to hold. Otherwise, a long way down for Bitcoin. Let's see. We don't need this one. All right, let's talk about the Donald and his tariff threats this morning. Trump fires salvo on North American trade pact. The president-elect signals an intention to upend the USMCA and wring concessions on immigration and fentanyl. And again, the USMCA, that was one of his big claims to fame, one of his big accomplishments from his first term, and now he's getting ready to throw that out. Donald Trump's new tariff pledges send a clear signal that he wants to rewrite the terms of North America's free trade pact and follow through with plans to hit China with tariffs, demonstrating to allies and adversaries alike that he is serious about renewing confrontation over a global trading system that he believes cost the U.S. dearly. On his Truth social media platform on Monday, Trump said he would levy tariffs of 25% on imports of all goods from Mexico and Canada, accusing both countries of facilitating illegal immigration and fentanyl abuse in the U.S. The Mexican peso fell 1.4% against the dollar at Asian Trading Tuesday, while the Canadian dollar lost 1%. He also promised to levy additional tariffs of 10% on Chinese imports, citing what he says is China's failure to regulate the chemicals that go into fentanyl. Many Chinese products are already subject to average levies of about 15% after the first phase of the trade war that kicked off in 2018. During Trump's first term in office, the Chinese yuan shed 0.3% against the greenback in offshore trading. And the major question is whether the threats are a negotiating ploy to wring concessions on trade and other policy priorities from U.S. trading partners, or the start of a sustained campaign to reshape global trade and the American economy. Either way, foreign leaders, business executives, and economists are bracing for fresh disruption to a world economy that has just emerged from a searing encounter with high inflation and rocketing interest rates, as well as continued friction over trade. Look, guys, inflation, that's the word here. I mean, tariffs are inflationary. There's no hiding it. It's going to drive prices higher for the consumer. That's kind of being overlooked here. Everybody's like, go Team America, put them tariffs on. And then what you realize is you're essentially cheering for a tax on yourself. So ultimately, it's going to be the average person who pays the price for this thing. Do they offset that with some other, again, the deregulation fairy dust that they sprinkle on everything, or are they going to lower taxes on top of it? I don't know. But get used to higher inflation, guys. We've been saying it for a while now. It really looks like it's going to come back. And that's besides what I think the central banks and the treasuries are going to do around the world with the continued monetary debasement. And there was some talk of that yesterday with Scott Bessent being chosen as Treasury Secretary. He is a big policy dove. Any way you look at it, guys. And I was saying this in the lead up to the election. I said it over and over again. I didn't think it really mattered. I think no matter who came out on top, one way or another, the inflation is going to come back. And it looks different, right? Whether it's going to be through tariffs or through easy money and, helicopter money like the other person would have put in, I don't think ultimately it matters. Prices are going higher. Now let's talk a little bit about what's going on in retail here. Let's start with Dick's Sporting Goods, the best one of the morning. Dick's Sporting Goods posts robust holiday guidance. Dick's Sporting Goods raised its full-year guidance on Tuesday after the CEO, Lauren Hobart, called an excellent back-to-school shopping season and better than expected comparable sales for the third quarter. Now, it's the fact that they're citing back to school as the reason for their really good quarter that's making me lean towards its apparel driving Dick's really good numbers, because nobody really gets their back to school shoulder pads or back to school baseball bat. It's typically back to school clothes that you're selling. So again, I don't know that for sure, but my gut is telling me it's apparel. It's just those Kohl's numbers really makes it hard for me to say for sure. But the sporting goods giant is now expecting fiscal 2024 same-store sales to grow between 3.6 and 4.2%. That's up from a previous range of 2.5 to 3.5. So they're raising their comps guidance. That's ahead of the 3.4 growth that Wall Street analysts had expected, according to Street Account. So really good numbers from Dick's. Once again, I'll give you those. The net income up 13%, revenue flat, comparable store sales up 4.2%. Again, citing back to school as the reason. Dick's stock is doing really good ahead of the opening bell here. It was up 2.5% yesterday. It's up another 6.5% this morning, trading at $229.00. That's up almost $14 here. Now, Best Buy earnings not nearly as good as Dick's Sporting Goods here. Best Buy cuts full-year sales forecast due to softer demand for consumer electronics. Best Buy on Tuesday cut its full-year sales forecast as it missed Wall Street's quarterly revenue expectations, and a fresh batch of iPhones and AI-enabled laptops weren't enough to drive higher sales. Pay attention, you Apple guys, all right? Again, I'm hearing mixed things about the iPhones here. Now, Best Buy, this is an old store, right? It's old brick and mortar. They've been on their way out for a while, so maybe we shouldn't draw too many conclusions from this. But again, if this new Apple Intelligence thing was really selling like gangbusters, we would have seen it in Best Buy's earnings, and we're not. The consumer electronics retailer said it now expects full-year revenue to range from $41.1 billion to $41.5. That's compared to prior guidance of 41.3 to 41.9, so they're trimming their guidance here. It expects full-year comparable sales to decline between 2.5% and 3.5% compared to its prior expectations of a 1.5% to 3% drop. Comparable sales include sales online and at stores open for at least 14 months. In the company's earnings release, CEO Corey Barry said it saw softer than expected demand. She pinned that on a combination of ongoing macro uncertainty, customers waiting for deals and sales events, and distraction during the run-up to the election, particularly in non-essential categories. There's that election excuse. I've seen that a lot. Like, oh, gee, I'd love to go buy a new stereo, but the election, I'd love to upgrade my phone, but election, says nobody ever. But apparently a lot of CEOs are really blaming the election for slowdowns in sales. Now, Best Buy stock not doing so good here, down 7.3%. I mean, it's doing better than Kohl's. I guess they got that going for them, but trading right now at $86.20. That's down almost $7 this morning. Rough morning for Best Buy. And again, Kohl's just absolutely crushed here this morning. Kohl's stock tumbles toward a 4-year low after earnings miss across the board amid weakness in clothes and shoes. And this story was so bad that this is why I'm doubting the apparel story over at Dick's Sporting Goods. How can they be so freaking different? But man, they are. Shares of Kohl's tumbled 11.8%. That's more like 18 now, to more than a 4-year low in pre-market trading on Tuesday after the department store chain reported fiscal third quarter results that missed expectations across the board, citing continued weakness in the apparel and footwear business. The downbeat report comes the morning after the company's CEO said that CEO Tom Kingsbury was stepping down. Oh, a new chief executive. That's always a good sign too. This is effective January 15th. Net income for the quarter, November 2nd, dropped $22 million. Dropped to $22 million or 20 cents a share from $59 million or 53 cents a share. Guys, that is awful. That's a 63% decline in net income. That's not just a bad quarter. That is a dreadful quarter. This missed estimates of 28 cents. Net sales fell 8.7% to $3.51 billion, below the consensus of $3.64 billion, as same-store sales sank a dreadful 9.3%. And that missed expectations for an equally dreadful 5.1% decline. Guys, a 9.3% drop in same-store sales. That's really bad, really, really bad. And look, Kohl's is responding accordingly, now down 19% ahead of the opening bell here, $14.84. That's off by another $3.50 here. So, it's hard for me to believe that Kohl's could be doing so bad, and yet the clothes are flying off the rack over at Dick's Sporting Goods. But it really looks like that's what happens, unless, of course, people are buying back-to-school baseball gloves, and that's what drove things over at Dick's. Now let's talk about the CHIPS Act funding. This one's pretty disappointing. Now, it looks like a good headline, but the fact that the market was expecting so much more, people are actually reacting negatively to this one. Intel gets a $7.9 billion CHIPS award for a U.S. factory expansion. The grant is $635 million smaller than the proposed $8.5 billion deal, and Intel ultimately didn't take $11 billion in offered loans. The Biden administration has finalized a deal to give Intel nearly $7.9 billion in federal grants, the largest direct subsidy from a program to boost domestic semiconductor manufacturing. The agreement for the struggling chip maker, smaller than an earlier proposed award, means that Intel can begin receiving funds as it hits negotiated benchmarks on projects in 4 U.S. states. The company will qualify for at least $1 billion this year, a senior administration official said, based on milestones it has already reached. Specifically, Intel will get money for projects in Arizona, Oregon, and New Mexico, according to people familiar with the matter who asked not to be named because nobody names their sources anymore. The company's greenfield site in Ohio, which has been delayed by several years, is not yet eligible for any federal support, the person said, though it has already received $2 billion from the state. So looks like 3 out of 4 projects are getting funded there. But the other key detail here is this is a smaller grant, but no loans. Intel was originally in line to win $8.5 billion in CHIPS Act grants and $11 billion in loans, but the final deal has a reduced grant, and Intel chose not to take any of the loans, the senior official said, without elaborating on reasons why. Like, what? We got to pay this money back? No, we'll take all the free shit, and if you guys want to be paid back, you can go pound sand. So if Intel was really serious about building these mega factories all over the place, they'd be taking the grants and the loans. They'd be taking the funding, especially considering how high interest rates are right now. Now, I don't know what the terms of these loans are, but I'm assuming the government is offering very generous interest rates compared to what they'd be getting in the private sector. And Intel turned it down. So it's a much more muted demand for this CHIPS Act cash than you would expect. Again, on the tariff thing, we were talking about how, okay, maybe the silver lining to the inflation that the tariffs would cause is that it's going to lead to more onshoring, more domestic production. Well, if that was really the case, we'd be seeing a bigger appetite for this funding for the CHIPS Act. I mean, here you've got the government is willing to pay you for the onshoring or for the reshoring, and Intel's just not taking it. Intel stock this morning, it was negative for a while. Now it's back in positive territory. It's up about 10 cents, 20 cents here, less than 1%, $25.04 for Intel. Stock's just not doing that great here. So again, guys, the tariff threat, it's inflationary. There are ways you can offset it, like tax cuts, like deregulation, like reshoring. But if the reshoring was really going to happen, we'd be seeing Intel more hungry for this funding that's available. They're not. Why? Because it's expensive to operate factories in the United States because Americans demand a higher wage. That wage is only going to go up because Americans are owed a higher wage still. They never got the raise that they should have got because of inflation. And it just makes it difficult to really bring all those factories back. And thank you very much to my moderator, Mish, for being a blue wrench for everything you do for the channel, as well as your research assistant, sir, and for reminding us, guys, no show on Thursday or Friday because of the holiday. So you will have your mornings back to do it with as you please. Avoid the mayhem of Black Friday if you can help it. No need to trample each other to death for a Tickle Me Elmo. Although I'm curious, will Black Friday be as stampede-ish as it's been in prior years with the consumer being so hurting for inflation? I don't know. Or maybe they'll be even hungrier for the discounts because of that inflation. Only time will tell. Thank you for the reminder, Mish. And thank you, Charles G., who says, did you see the drop in MicroStrategy yesterday? I didn't see it specifically, but I did see the drop in Bitcoin, and something tells me MicroStrategy dropped even harder than Bitcoin did. I watched a stock trader make money on it yesterday. I've thought about doing that. Look, MicroStrategy, I'm not the biggest fan of Saylor. We did a big show about MicroStrategy on Friday about what was going on behind the scenes with the bonds and why they're able to do this infinite money glitch thing. I think what's going on with MicroStrategy is you've got a lot of rules-based funds and people who are not allowed to go out and buy Bitcoin because of regulatory or prospectus limitations. And so they're buying these MicroStrategy bonds as a way to get levered price exposure to Bitcoin. I don't want anything to do with that. I own Bitcoin outright. I buy a little bit on the regular. I don't try to trade it. That's what I do. MicroStrategy, it's a great story. Look, Saylor is very comfortable with risk. That's what it comes down to. That guy is Evel Knievel on steroids. One day it's going to blow up in his face. I don't know if it's going to be someday soon. Is it going to be this crypto winter or maybe the next or the one after? He barely survived the last one. He got very close to being liquidated when Bitcoin dove after the FTX collapse. And there will be another fraud and there will be another collapse. It happens reliably. The question is, does MicroStrategy survive? If MicroStrategy blows up, there's going to be a lot of selling of Bitcoin, and that will be Bitcoin's price will drop big time if that happens. So that is definitely a risk. Thank you very much, Charles, for supporting the channel, sir. And thank you to Eduardo Garcia, who says Trump wants 15% corporate income tax for corporations that produce in the USA. The only mountain to climb is getting Congress to agree. That is the rub. I mean, can you get Congress to agree on what time it is? They come from different time zones, so they probably won't agree on that. Look, getting Congress to do anything but make stupid speeches is pretty difficult, and I don't think that changes just because one guy got elected. Now he's got both control of both houses. He's got the Senate and he's got the House, but he's got very narrow margins in both the Senate and the House. And if there's one thing Republicans do, it's fight among themselves reliably. So the idea that just because the Republicans can control both houses, that doesn't mean Republican agendas are going to get rammed through. All it takes is a couple of guys to derail it. And I mean, do you guys remember the Speaker of the House debate and all that BS? They couldn't even pick a leader among themselves. And so, you know, the whole thing with the only mountain being Congress, that's a big, the only mountain is Mount Everest. Other than that, it's a cakewalk, you know? So, you know, the 15% corporate tax, I do think that the Trump tax cuts from his first term are probably going to get extended. I think that's probably going to happen. The real question is when the spending cuts, when that comes up, when congressmen have to stand in front of a bill that cuts spending for some pet project in their district. That's the question is, do you get that done? And something tells me that's probably not going to happen, which means the debt problem will continue to get worse. Thank you very much, Eduardo Garcia. And also thank you again, Eduardo Garcia, who says happy Thanksgiving and thanks for all you do. Well, happy Thanksgiving to you as well, Eduardo. Thank you for the good vibes, sir, and the support of the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate that very much. Once again, reminder, guys, no show on Thursday and Friday, but we will be back tomorrow. Also, shout out to my magnanimous Melonheads on Patreon and YouTube. We will be getting together tomorrow afternoon for our weekly get-together on Zoom. I got links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.